This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Investor Connect is a 501c3 nonprofit dedicated to the education of investors and startups for fundraising. Please consider donating $100 to the program to help others in their investor and entrepreneur journey. You can find the donate button on the investorconnect.org website. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Gurdeep Prewal, co-founder of Rocana Ventures. Rocana Venture Partners is an LA-based venture capital firm that invests in early-stage consumer product goods brands. Gurdeep, thank you for joining us.
Thank you, Hall. Thanks for having me today.
Great. So what was your background before investing in early-stage companies?
I have not come from the food industry, so it was a big pivotal moment for me when I changed careers. I spent most of my career in investment banking, like most people who were sort of a lot of people who were graduating from sort of business finance in the late 90s and early 2000s. Getting a job in investment banking was a prestigious job to get. For obvious reasons at that time, it was a high-flying industry. And so it was a great sort of training ground for me in the early years. And I certainly went through the grind of investment banking. But over the years, as I sort of matured myself and I discovered my own path of what I wanted to do, I really came to the realization that it was really missing a mission-driven impact to what I wanted to do with my career. And so that's what eventually guided me into angel investing, trying to find my own way there, investing in a lot of different industries. My business partner and I, we invested in a wind farm. It was actually our first investment. And that actually did pretty well. But we then invested in a mobile banking business, wine distribution business, a couple of restaurants, a hostel business. We were a little bit all over the place, trying to discover our way as angel investors. And then really in 2013, 2014 is when we started investing in the space we're in now, which is Better View CPG. And I think it all just started to align for me at that point as far as finding something that I could leverage my financial acumen, but in a mission-driven approach.
Great. So what excites you right now?
I'm really excited to see that a lot of the early vision that we had in terms of how we wanted to set up Rocana and be very mission-driven and focused on some of the things that we said we were going to really drive hard into. At the time when we were thinking about starting the firm, a lot of people thought what we were doing is pretty niche. I think today you can certainly see that a lot of the stuff we're doing is not so niche, even though in the grand scheme of things, a lot of these brands are still small market share relative to the bigger incumbents. But they're certainly real threats and real alternatives now. I think 5-10 years ago, you might have said they're like nipping at the heels of big CPG, but not really causing much of a dent. And I think today, you can certainly see that many of these brands are going to have a really long life in the market. So that's exciting for me to see.
Great. So you see a lot of investors and a lot of startups out there. What's your advice for people investing in startups in the CPG sector? What do you tell them to do before they write that check?
Well, for us, it always starts with product and founder, ultimate conviction in these two. Product has to clear our sort of mission guardrails. We have to believe that when we're investing in a brand, in a product, that it is doing something truly transformational from a nutrition standpoint. It has the potential to be a category creator or a category leader. We have to be able to see that brand actually becoming a market leader within the category. So having the conviction that the product itself can stand on its 2 feet as being really something that's transformational from an innovation standpoint. And then, with the founders, building that confidence with the founders that they're going to be able to go and execute on the vision, or at least surround themselves with the right people that can help execute on the vision. That's very important for us. At the end of the day, we're minority investors, just like most VC money on the cap table. And so we're never really in control, even though we can try and put terms and conditions in to try and protect us in certain ways. We're ultimately really investing in the team and the people who are behind the vision. So really buying into the character of the founder and and the team and ability to navigate through ups and downs is something we look forward to.
Great. And then on the other side of that table, what's your advice for people raising funding from investors? What do you tell them to do before they go out to start that campaign?
I think first and foremost, it's a competitive market out there, right? In the food and beverage industry, the barriers to entry are really low. Anyone can really go out and start up a brand. And nowadays, direct to consumer, you can sell directly to consumer pretty easily. So I would say to any founder out there who is looking to raise money, be very clear on your story, your vision. What are you trying to create? Don't just pitch a product, pitch a vision for a business, what this thing is going to become. Because I think when you're just talking product only, you're limiting yourself to a lot of competition. But when you sell a vision for a brand and what this thing can become in terms of a brand and a platform, then you start to really get investors excited.
Great. Well, let's talk about the state of CPG investing. How do you see the industry evolving from here?
We're at a really, really interesting time. There's so much that's happened the last few years in our industry, some negative, some positive. I think one of the biggest developments we've had in our industry is the opening of the capital markets to many of our brands. So you're seeing in the past, you would build a brand and you would really want to try and sell to a strategic. I think now you're seeing there's actually a lot of pent up demand in the capital markets for investing in ESG centric products like the type of companies that have been listing recently, like Beyond Meat and Oatly. You can see the kind of valuations that they're getting. In the past, if you were talking to a strategic and you want to sell your business, you were probably going to have to start the conversation with a strategic at 2 to 3x of revenue and try and work your way up. But now you have capital markets that are willing to list you at 20 times revenue. It gives you a lot of leverage in terms of negotiation. It gives you another opportunity or another path to exit and liquidity. We have seen some correction, and there will be some correction in the market as some of that supply demand gap closes in the capital markets. But I think that's a really exciting development for our industry. Clearly, supply chain is something that right now a lot of brands are very focused on. Is causing some disruption to the business, but I think that's hopefully going to be temporary. But the long-term prospects of having alternate avenues for liquidity through capital markets, I think that's a really good development for our industry.
What do you think is the biggest change we'll see in, say, the next 12 to 24 months?
I think you're going to have, I think people have been saying this for some time now with the sort of day of reckoning with valuations, but I think it's really happening. It's going to happen now. I mean, I think you've seen some brands raising money at really insane valuations with very little revenue. And that correction, I think, is going to happen. I think you have to really sort of fasten your seatbelts and be ready for a bumpy ride. If you're sitting on high valuations to try and raise, I think nowadays, if you look at even how the market is evolving in food and beverage, it's becoming tougher and tougher to see where the innovation is coming from. The plant-based, clean label, low sugar, the kind of stuff that we really call our pillars for our investment strategy is almost becoming table stakes. Superfoods, adaptogens, it's becoming really well known to the consumer now. It's hard to differentiate so much on ingredients now. I mean, we still have a long way to go, of course, but the beginnings of what is going to be normal in the food system is already starting to appear. And so I do think that as you're trying to raise money and you're trying to raise money at certain valuations, you really have to ask yourself what kind of market you're in as far as your product, your business, your innovation relative to everything else that's out there. There's going to be a correction from that standpoint.
Great. Let's talk about your investment thesis in more detail. Can you give us some more color around what exactly do you invest in and what's your criteria?
Yeah, so we have a really long investment thesis, even though we're a fund and we have to, of course, make investments and try to turn our portfolio. But the big picture vision of what we're trying to do, I mean, you could argue that it's a 10, 20-year vision. We have a brand name as Rocana, and we have a tagline under our brand name which says Better Living. And we define better living as what you put inside yourself, what you put on yourself, and what you do with yourself. So we wanted to start with food and beverage, which is what you put on inside yourself. There's a lot of problems to solve with the food system. And we felt like that was the first natural place for us to start. But we're going to be adding, starting in 2022, we're going to be adding two more verticals we're going to be investing in: personal care and beauty, and mind body wellness. And so personal care and beauty is really what you put on yourself. And there we're looking to dial into really underserved segments of the market. So we're not looking to invest in beauty products that are going to reduce your fine lines or make your lips more plump. I mean, we're looking to invest in products that are, let's say, serving a wider ethnic audience where you can really dial into more personalization, or you serve underserved markets or really markets that haven't been served at all. For example, one that I would put out there is the menopause market. If you look at the menopause market, there's really not been a lot of solutions out there for women in menopause. One of those things that kind of sneaks up on you later stage in life, and no one's really prepared you for it. I think there's a huge amount of opportunity out there to do something in that space. So that's the kind of personal care and beauty would be looking for those underserved markets to try and dial into those. And then with mind body wellness, I think we're going to see more tech enabled solutions when it comes to understanding our unique genetic makeup and what makes us function. I think humans are just going to get smarter and smarter about how to personalize our own sort of daily routines to maximize our best selves. There's a lot of tools forming out there that are going to allow us to do that. I also think that when it comes to mental health as well, is a massive problem to solve. I think big pharma is going to see, just like we've seen with big food, a massive disruption. I think big pharma is going to see an equal level of massive disruption when it comes to alternative medicines. There's a long road to go as far as a regulatory environment around that, but I think it's going to happen. And so when you start to put all this together, understanding your unique genetic makeup, maximizing your human performance, giving yourself the right nutrition, feeling good about yourself, what you put on yourself, you start to then see really what is forming for us, which is this long-term thesis of better living for humanity.
Great. Can you talk about one or two startups you funded that fit your thesis?
Yeah, I think one of the investments that we are really proud of, we just closed a funding round for them now, is Olipop. They're a beverage brand. I think if you're in the industry, you probably already know about some of the success of Olipop, but I think for us, this brand really epitomizes everything that we look for at Rocana for a brand. And that is a very deep mission driven approach to what they're doing. Their formulation is deeply rooted in science, and they're going to be doing some pretty exciting things to prove the efficacy of their formulations. They have a very dynamic, engaging branding, packaging design that's exciting for consumers. You have a taste profile that really suits mass market. So you have the ability to really go out to a wide audience. And so when you put all those things together, a product that has real functional benefits, a product that can have mass market appeal, and a brand that actually can gain mindshare with the consumer, you start to have the makings of something that can be truly disruptive in the soda space.
Great. So there's a lot of challenges out there in the startup space. What do you think is the main challenge your CPG startups face when they launch their business?
I think scaling is really the biggest challenge. I think many entrepreneurs come up with great products, but then taking that product and being able to scale it at the right margins, it's almost so clear that actually that's where things go wrong most of the time, is being able to scale the product with healthy margins. If you're a CPG business that has the sort of benefit of just receiving unlimited amounts of capital, you tend to not focus on profitability too much. But what we have seen is that some of the best brands will obviously deliver that high growth, but really dial into their margins really hard as well, and do everything you can to just constantly improve those margins so that you can be a sustainable business. And that's really what it takes to take a product and turn it into a business, is being able to scale it and with healthy margins and really making that sustainable. So getting the supply chain right, getting your co-man right, and constantly being on top of where you can save and improve margins, and also just really getting serious about what you have in your ingredient deck, because you can sometimes have an ingredient deck that is stellar and is super clean, but if you can't build a business around it, it's just not going to be sustainable.
So what's the main challenge the investor faces in the CPG space in today's market?
Well, I would say finding the innovation at attractive valuation is probably the toughest thing to do. We often face situations where we're looking at a deal and we're like, wow, this is amazing. I mean, everything just ticks the box. It looks great, but the valuation is just like really astronomical, right? And then on the flip side, you just see a ton of stuff all the time that just really does not, in my own mind, does not clear my innovation hurdle. 95% of stuff I get, I can't even clear my mental hurdle when it comes to, is this really innovative and is this really something we need in our system, right? In our food system. And so I think that's really the challenge right now. I think going back to a point I made earlier, where so much of superfoods and functional ingredients becoming table stakes and commonly known now, that's really where the challenge is, finding that innovation at attractive valuation.
So you see a lot of sectors and applications out there in the CPG space. If you had to pick one or two that are really good opportunities for investors to pursue, what would you call out?
Yeah, and that's a great question. There's obviously many categories out there that have already seen disruption. But if I was to zero in on one, we're taking a very close look at the noodle category right now. That's a global category with a value of over 40 billion in the category and a very high consumption. You have around 160 or 170 billion servings of noodles consumed a year. And so you're talking about a category that's actually feeding a very large part of the base of the pyramid of the world. And so, but when you look at the product offerings out there, it's just empty calories. There's zero nutritional value in many of those products. It's basically water, sodium, and wheat. And so we really think that there's tremendous opportunity to disrupt that space and bring better nutrition to a category serving the base of the pyramid.
Great. Well, in the last few minutes that we have here, what else should we cover that we haven't?
I think one of the challenges that we're going to face in our industry is that, so much of the innovation that we see happening is primarily in sort of Western markets, and especially in the US, we see a ton of innovation happening in our space. But the problems that we face is a global problem with the food system, right? The stress that's being caused in the food system is a result of global demand. And some of the issues around industrialized factory farming leading to very cheap animal product consumption within our system, or diabetes, for example, these are global problems, not just sort of US-centric problems. And so how do we take all of this innovation that we're seeing and deploy it everywhere else in the world so that everyone can benefit and sort of really solve the issue on a global level? That's something that we think a lot about. We have a lot of investors in our fund who are international. Many of them have a vested interest in the food industry and in other parts of the world. And so we're always doing that. We're constantly thinking about how to connect the dots and bring better nutrition to the rest of the world as well. And I think that's something, I'd love to just challenge the industry to do that more so that we're really thinking about this solution being a global solution.
Great. So how best for listeners to get back in touch with you?
Yeah, my LinkedIn profile is open and public, so certainly anyone can contact me there. That's probably the best way.
Great. We'll include those in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Thanks a lot, Noel. Thanks for your time. Appreciate it.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.